Good morning, everyone. How are you doing today? It is Tuesday, May 25th. And yes, this is your daily financial news. My name is Michael Zuber, author of One Rental at a Time. And I've created this channel for you. I basically spend an hour, maybe 90 minutes in the morning, enjoying some cups of coffee and reading about what is going on in the financial or business world. I have been doing this for 30 years, pretty much every single morning. I'm a morning person. My wife is not. So this has allowed me to kind of dive in and really understand what's going on. Was inspired by a conversation with Nipsey Hussle and Gary Vee more than 2 years ago to create daily content. Yes, we are. And oh, by the way, we're creating at least 5 pieces of original content every day just for you. If you're interested in investing, real estate, entrepreneurship, do yourself a favor, hit subscribe. Not only will you hear from me, but you will hear from at least 6 or 7 multimillionaires every week. It is Tuesday, so we have the Lumberjack on this morning, as well as Omar. And then I have a pretty busy morning. After that, I have a one-on-one mentoring, and I'm part of an online mastermind. I'm the guest speaker. So long day for me, a lot of talking, but it's going to be amazing. Couple quick announcements before we get into the daily financial news of the morning. First and foremost, my podcast, which is really a recreation of this YouTube channel, except in audio only. It can be found on all of your various podcast platforms. Do me a favor, if you want, go take a listen. We are going to likely be over 1 million listens, I think they call it, by the July 4th weekend. So yes, folks, we are growing fast in the podcast world. So if you want to tell your friends and family you are part of the first 1 million, do yourself a favor and check those out. And then we are having lots and lots of students buy the course, How to Get Started One Rental at a Time. Yes, the course is going up 50% or $100 in 6 days. Makes total sense. People want to save money. Probably what I would do. So let me do this. I do my best to welcome everybody who buys the course and joins the Facebook group, but I am having a hard time keeping up. So this is typically what I want to say. First, welcome to the group. Introduce yourself. Tell people where you're at. So welcome to the group. And most importantly, enjoy the process. How to get started one rental at a time is a mindset. It is going to ask you to focus. It is going to ask you for a quick 20-minute daily discipline. If you're ready, enjoy the process. Welcome to the group. It is an amazing group. Again, the course, How to Get Started One Rental at a Time, the Facebook group you have to ask to join is called One Rental at a Time Works. So again, welcome, enjoy the process. Now let's get on with the news. Man, Case-Shiller Index, you got to start off with first, came out and talked about 13.2% year-on-year price increases. I hate to keep pointing at this, but I'm really glad I'm not one of those people that talked about a 40% price crash because, wow, they were wrong and they've embarrassed themselves. Just for reference sake, last month numbers was 12.1 year-on-year comparison. Phoenix, boy, if you invest in Phoenix, or more importantly, if you own property in Phoenix, woohoo, congratulations, you are up 20%. The top 3 were Phoenix, 20%. San Diego, not far behind, 19.1, and Seattle, 18.3%. These are unbelievable price appreciations. If you've done the work, got in, congratulations. Boy, if you got in 2010, congratulations. But yes, I think we are seeing a trend. The single family asset is the place to be. We are going to see price increases. We will eventually see interest rate increases, which will hurt affordability, but people still want space. So we are going to see increase in rents. And talking about increase in rents, rents are rising. Rents are rising already. They are rising in San Francisco and New York, of all places. Folks, the most hard-hit areas are seeing rent increases, which means the rest of the country is seeing rent increases, but there is a subtle catch. Rents are increasing most in single family. Are you shocked that standalone properties are rising faster than apartments? If you have been following this channel, I've been telling you this because I own both. Where is it? There it is. Apartment rents are up about 1% nationally speaking. Houses, 4.3%. Folks, I've been telling you this is happening. I have a portfolio. It's kind of real information. I would tell you these numbers are from Core Logic and they're from March. I would tell you it's even faster, right? Really April and May has seen even higher rental growth in single family home. You want to do the work. I suggest you buy the course. You do the work. You get focused now. Take advantage of Fed-induced low rates. Go get cheap 30-year debt. Please do that. Even if you just get to 4 or you get to 1, you're going to be in a much, much better position because what happens, what have I been telling you? Prices accelerate first. Rents will be delayed, but equally fast later. And if you own rentals and rents go up and you have fixed rate debt, that's generally a good day. So do the work. Do the work. I don't know if you saw this the other day, but good old Ray Dalio, right? There's kind of two people that I follow, Warren Buffett, Ray Dalio, I talk about all the time. Ray Dalio interviewed, actually basically said he hates bonds. He actually had the line that said, I would prefer Bitcoin over bonds. That's like game changing. Ray Dalio, historically speaking, has not been a fan. Ray Dalio in that same interview went on to say, you know what? I got some Bitcoin. He didn't quantify it. You know, a billionaire having some Bitcoin is, not really interesting because I don't know. How many do you think he would have, right? I don't think he steps in and gets 1. Maybe he gets 10. Maybe. I don't know. Maybe. I don't know what happens. But again, that was an interesting interview because again, I've been following Ray Dalio. I have his big book called Principles. It's a pretty dry read. You really got to understand finances to understand his logic. But if you can get through that book, which frankly took me longer than I would like to admit, but got through it, it's worth a read. But it's one of the harder financial books to read, frankly. So again, but Ray Dalio saying he'd rather have Bitcoin over bonds. That tells you something. Tells you inflation's coming. Pretty crazy. United Airlines is telling you what I have been telling you. People want to get out of Dodge. They want to travel. That 4th lane of our highway, the service sector, is going to start ramping. Leisure travel now exceeds 2019. It's easy to exceed 2020, right? We were all shut down, but now exceeds 2019. That's interesting. It obviously does not mean business travel, but again, they got to point to the bright spots where they find them. I saw an article the other day that kind of explained why 800,000 accounts in Bitcoin were margin called. People are using 100-to-1 leverage. Let me just say this. Leverage investing, whether it be stocks, real estate, or crypto, is the surest way to financial suicide. It feels good in the moment, but the market will get you. If you're buying crypto, any of the coins, 100-to-1, you're dumb. You're an idiot. You are committing financial suicide. I don't know what else to call it. That is ludicrous. 100-to-1 and you're surprised your account gets brought to 0? Really? Really? Oh, it's just silly. Robinhood's getting ready to go IPO. Not really sure how I feel about that. Certainly not going to play in that stock. I don't know. Will it be like Coinbase and really land with a thud? Will it be the next GameStop and be run up by all the meme stocks? Don't know. I can tell you this. I think the gamification of investing drives me crazy. I don't think investing is a game. I think it certainly takes more work. Yeah, I'm not really a big fan of gamification. Now, if you want to gamify learning investing, I can get behind that. But gamifying actual investing where you have money on the line and you're selling the order flow, not cool. Not cool. Don't know if you saw this, but Amazon is dropping some big money. $9 billion to buy content. They are buying MGM Studio. Don't be confused, folks. One of the things they are doing because they make so much money is they are making capital investments so they can adjust their income and expenses so they can report less profit. Yes, spending $9 billion, they can call it an investment. I'm sure their accountants will allow a lot of that $9 billion to drop right to the bottom line, and bingo bango, it doesn't look like they made so much money. This is what rich people and big companies do. That's what they do. Don't know if you saw this number, but I was shocked by it. Do you know how many people move to Florida each and every day? Take a guess. I'll pause for a minute. You can put the number right here. If you're watching this on record, hit pause, list a number, see how close you were. How many people are moving to Florida a day in May of 2021? Got a guess? 3, 2, 1. 900 people a day. 900 people a day. Mostly coming from New York and New Jersey. Most are saying it's because of taxes. And interestingly enough, businesses are also coming. This isn't only kind of the retirees that were close in thinking about it and just going south. These are entire businesses. And many Wall Street firms are also moving, right? Wealth management, things of that nature. Florida is becoming an economic powerhouse, and I suspect in the next 3 to 4 years, Florida will be the economic powerhouse on par or at least close to New York. So pretty interesting. Again, I already talked about rents rising, folks. Get a single family home rental. If you don't own a primary, maybe house hack. We will be talking to the lumberjack later today about that. Get on the property ladder. According to CoreLogic, 1 in 7 of the houses purchased this year went to investors. 1 in 7. I hope those are you. I hope you are getting one. I know I have bought a few and look to buy more. But yeah, 1 in 7. It's possible as we go forward in this decade by 2030 that the single family home is a lot more expensive. It's a lot harder to get on the property ladder. You could see that 40-year mortgages have to be used because nobody can afford it on a 30-year mortgage. So again, if you knew that was coming, you would want to invest ahead of that and get the wave at your back, the wind at your back. And then lastly, saw the earnings report from Lordstown Motors. Turns out building electric trucks from scratch is hard. They had to slash their production targets by half. And they went ahead and said they need some more money. So yes, it looks like Lordstown kind of disappointed, and I'm sure their stock got whacked for it. So again, this is the daily financial news. If you are one of my newest students and you're adding yourself to the Facebook group, again, let me welcome you to the group and tell you to enjoy the process. Focus and daily execution is where it's at. Do the work, get ready. Inventory is coming. Clearly want to take advantage of the 30-year rates if you can. So again, I'm trying to welcome everybody. It's actually growing pretty quickly. So again, how to get started, 1 rental at a time, goes up 50% June 1st. So it'll be $299. It's $199. Buy it now. If you do buy, you can join the group. 1 rental at a time works. Introduce yourself. The group is amazing. They will welcome you. I will do my best to catch up and welcome you as well. If not, welcome and enjoy the process. Bye-bye.